Right. We'll start session today. Basically, we covered up to now. If we are going to recap what we have discussed now is basically what are the adjustment made. If you can remember, normally when computing accessible income from business, as the income from business, we need to adjust. Normally once we take accounting profit, we need to do several adjustment in order to arrive as accessible income from a business. Therefore we can't take whatever the auditors auditors profit, that we call as profit before tax. Normally auditors profit we are not allowed to take as a profit for taxation. Therefore, we need to do some adjustment in order to arrive tax accessible income from business. So we did a discussion up to now from the beginning. If we I just want to recap just from the introduction. We went through the person definition and the year of assessment. We discussed and the tax on taxable income formula and the what is the taxable income. Then section 3, and then we discuss residency of a company, how to determine resident and non-resident person. So, and then relevant case laws, we will discuss in detail the summary of these case laws. We will share the summary of the case law in order to determine you to as a practical example how they have decided the residency of a company. Then qualifying payment we discuss, and then the accessible income. Mainly if a company, when we consider an accessible income, mainly you need to focus on business income, investment income and other source, because the employment accessible income from employment will not fall under company. So we discuss and the definition of company, what constitute a business, and then what is trade we discuss. And then here if you can see, we discuss whatever the accounting profit, and we need to do the adjustment here. Then we are discussing now disallowable expenses and allowable expenses. Under this we discuss whatever the accounting method of accounting. Normally it is accepted accounting principle, the accounting standard published by CA Sri Lanka and also IFRS. Then the accrual basis is required to adapt for the company. So, and the disallowable expenses, we discussed domestic expenses and taxes to be disallowed. We discuss. We will share this to you. Actually, apologize for the I couldn't share the slide tutor, even though we shared the whatever the detailed material. We will share the slide soon after finish today's session. And here we discuss interest expenses, normal rule for the person, and the thing capitalization we discuss, and the finance cost, thing capitalization adjustment continue, and the trading stock adjustment, cost of sale we call it as. Then we discuss research and development expenses and agriculture startup expenses, and then the capital allowances and balancing allowances. Then we discuss under that rate the years, number of years applicable for capital allowance purpose. Then the 20%, as you can see here, the 20% is the rate, that means 5 years. So the intangible asset is special rate, the 20 years or the actual useful life. So then transition provision we discuss. We can continue the previous year 17-18 rate for the 18-19 and continue if there are any remaining WDV. So we discuss detail. You can go through with the session we recorded previously. Enhanced capital allowance we discussed. And then today we are moving to repair and improvement expenses. So here repair and improvement expenses. it is basically in the section 14. If you can refer the section 14, section 14 itself explain how we can claim repair and improvement expenses. Here, if you can read this one, expenses incurred in respect of repair and improvement of depreciable asset. It should be a depreciable asset, normally, not the capital asset, not the fixed asset. It should be a depreciable asset. So, and can be deducted if asset is used. The important part you need to highlight here, the is used for the production of income. If the depreciable asset used for the production of income for the year of assessment, irrespective of whether the expenses are of capital nature or not, right? Right. I kindly request you to mute all the participants when you are logging. Otherwise, we can hear some noises. So then can be deducted if the asset is used in the production of income. Then see here, if the asset is used in the production of income for the year of assessment, irrespective of whether expenses are capital nature or not. Then the important part is whether it is capital nature or not, right? You can deduct such expenses here, irrespective of whether it is capital. This provision is not applicable for investment asset because it is not a depreciable asset. So then you need to be careful that if it is investment asset, then you can't claim repair and improvement expenses, because if it is investment asset, normally investment asset, let's say rent, you have rent income, then you can claim 25% repair allowances out of that. Then it is not subject to normal repair and this adjustment. It is not coming under section 14 adjustment. So then this, let's assume a company incurred repair and improvement expenses, let's say 100,000, then can we claim that amount? Normally in the previous law, we claim entire 100,000. There were no any adjustment for repair and improvement. Here, under new act, with effective from 1st April 2018, that means year of assessment 18 and 19 onward, you are required to do this adjustment, because they have bring into this law in order to increase the tax liability. Because if some company, they might think that they can deduct whatever the repair and improvement incurred by that company, they will incur a big repair and improvement if they want to reduce the tax burden. Let's say assessable income from a business, if they want to reduce, then they will charge big amount to the P&L as a repair and improvement. Then that arrangement cannot be done under new Inland Revenue Act. They can't do that one because of this section 14. Then whatever the repair and improvement cost incurred, they need to do this adjustment and check whether how much we can claim as repair and expenses for this for that year of assessment. Let's say your year of assessment is 18-19, then you have to do this adjustment in order to determine how much you can claim as a repair and improvements expenses. Because let's say 100,000 you incurred in the year of assessment 18-19, then you need to check whether how much I can claim as a repair and expenses. So then we'll look at the restriction given in the section. However, it is restricted to lower of the, here keep in mind lower of actual cost or in the case of repair and improvement to a class 4 depreciable asset. If it is a class 4 depreciable asset, then the class 4 depreciable asset, if I can go through with the depreciation rate we discussed here, the class 4 depreciable asset, you can see here class, right? The class 4 key means here, class 4 mean here. Then the class 4 depreciable asset, the building structure or similar work of a permanent nature. Then the 5 years, they have allocated the capital allowance 5 years. If the class 4 they act is referring any class in the depreciable asset, then you need to refer this in order to determine the class, right? Then moving to the slide. Now you are clear. Then the class 4 depreciable asset, building, structure, etc. 5%, that means 20 years, 20 years of written down value of the asset at the end of the previous year. Then the actual cost or 5% of the WDV, the asset at the end of the year. Previous year, at the end of the previous year. That means the year of assessment, let's say we are in 1819, sorry, 1920. Now you need to check the 1819 if there are any WDV, then you need to determine that the 5% of WDV and the actual cost incurred. Then you need to determine that how much I'm allowed to deduct as a repair and improvement expenses. So we'll do the example here soon after finish this one also. In all other cases, 20%. If it is not a class 4 asset, that means building structures, then if it is not a class 4 asset, then 20% of the WDV. That mean 5 years. Then 20% of the WDV of asset at the end of the previous year. WDV in the previous year. You need to take previous year WDV in order to determine this threshold limit, right? Then the excess for which a deduction has not been allowed as a result of limitation to be added to the depreciation basis of the asset. You know that depreciation basis, right? Depreciation basis we discuss. The depreciation basis mean WDV or cost. We call it as depreciation basis. Normally we discuss in the previous slide. Depreciation basis, you can refer the slide number 36. The depreciation basis mean what it is. The normally it is included cost of the asset or the WDV. WDV, you can take WDV as a depreciation basis, and also here we discuss section 14, the amount added to depreciation basis of the asset during the year of assessment exceed the expenses of repair and improvement referred in section 14. We are discussing repair, then whatever the repair and improvement adjustment, whatever the expenses, excess expenses, we need to adjust to the WDV, right? That amount also can be considered as a WDV in total. Then we'll work out what is WDV is. Normally the depreciation basis mean in this whiteboard, depreciation basis means normally, let's say cost, maybe 100, then that one also can take as a WD depreciation basis. And let's say they are going to deduct depreciation 5 years, then they consider 100, then they deduct 5 years divided by 5, then the amount is 20. Then the you will end up with 100 minus depreciation equal 80 is WDV. The WDV for the year year end, then you will arrive 80. Then this 80 is next year WDV. Then the next year WDV is 80. Then they will deduct, because that says that number of years, then you need to deduct 4. Then you will arrive at 20. Then again you need to determine WD for next year is 80 minus 20 is 60. For the year 1, let's say year 1 WD depreciation basis, then year 2 depreciation basis. Then you can see here what is depreciation basis based on the calculation. You can see 80 and 100. This is the depreciation basis. Normally we identified in the act. This is the depreciation basis. So then again act says, based on the repair adjustment, if there are any excess amount, normally let's say repair and improvement adjustment. I think anyone can comment whether you can see properly this whiteboard in the chat box. Can anyone text whether you can see this whiteboard or not? Okay, then thanks. I got it. Then let's say repair. Repair adjustment also will do it here. Let's say actual expenses. Actual expenses of repair. Then actual repair expenses. Let's say actual repair expenses is 100 million. Then it is required, we can't deduct this entire 100 million because we need to do the adjustment based on the WDV in the section, based on the section 14 adjustment. So then we need to determine then what is WDV of the previous year. The examiner will give you WDV of the previous year if they want to test this section 14 adjustment. Then you need, let's say examiner has given the WDV of previous year, prior year. Let's say 200. We are going to discuss, let's say, which asset we are going to discuss. Let's say all other asset, 20% of the WDV. Here. Right. Let's say 100, the WDV from previous year. Then this is not the class 4 asset. This is, the examiner says that this is not a class 4 asset, not a building. Then we require to adjust 20% of the WDV as a allowable amount. Then the 20% of the WDV means 20. Then the lower is allowed as expenses. Then you need to determine which is lower. Then write lower of these two. You can deduct as a WDV. As expenses, repair expenses. Low. That is lower amount is then how much? The lower amount is how much? 20. Then this one can claim as expenses. Then the difference between actual and the WDV, the 20% of the WDV, then the actual and the allowable amount. Then as per the section, how much the excess deduction. Then the excess deduction is how much? We need to add it to the depreciation basis. Then we'll check how much is the excess repair cost need to be added to the depreciation basis. Let's say excess repair cost. Excess repair cost, how much? Like 100 minus 20. 80 is the excess repair cost. Then this excess repair cost, what we have to do, this 20 we can claim as expense. Claimed allowable amount, that means the allowable amount, right? Then this 80, what you have to do? 80. This 80, what we have to do? Anyone can come in? This 80, excess repair cost. Then the actual repair cost 100. As per the rule, allowable repair cost is 20 million. Then we have excess repair cost 80 million. Then what we have to do? This 80 million. Anyone in this forum? The excess repair cost, what we have to do? Then need to add it required to be added to the depreciation basis, right? Then this 80 also, then let's say year 3, then here the WDV is 80, and then the initial WDV is 80, and then you need to add this disallowed expenses repair cost, excess repair cost also here. Then that amount also you need to add it here. You need to add here the 80. Then the depreciation basis will 160 divided by 3. Then how much? 160 divided by 3 is how much? Then that amount is the depreciation capital allowance can be claimed in the year 3, right? That amount you need to consider as a depreciation capital allowance for tax purpose. Then that the balance WDV will go to next year. Here the 53.33, right? This is the normal adjustment. Then the depreciation basis also, the new depreciation basis also the old treat depreciation basis. We call that 160 also depreciation basis. You can change this 100 or 200, let's say 200. Then I will do one for changing this one to 200. uh, say here, as per the given scenario, let's say WDV of previous year, let's say 200. Then if it is not a class 4 asset, then the examiner has given it is not a class 4 asset, then the allowable amount is 40. Then how much is the lower we need to consider? Lower amount we need to consider as 40 plus float. When compared with 140, it is lower amount is 40. Then the lower amount is allowed as expenses. Then the lower amount allowed as expenses, we can claim as expenses allowed. Then here 100 minus, this is not the case, then 100 minus, then excess repair cost is how much? Excess repair cost disallowed amount is 100 minus 40, then that amount is 60. Then this 60, here you need to change the 60, you need to add here depreciation basis, then you can add here 60, then here the amount is will be changed accordingly. 60 plus 80, altogether 140. Then that amount divided by 3 is amount the depreciation charge to the P&L. Normally, practically, this adjustment cannot be done because practically, if a company, let's assume big company, they categorize asset, repair, let's say machinery, furniture and fitting. Likewise, they categorize class of asset, and in order to do this adjustment, they need to identify exactly which asset they have made done repair expenses on which asset exactly. Then if they do the repair expenses as a bulk, then they have to identify actual repair costs on that particular asset. If they are unable to identify that asset exactly, then they can't do this adjustment. Yes, then because they don't have, then they have to identify exactly which asset are going to repair, and then what is the WDV of this asset. Then there are some practical difficulties in order to determine which asset we are going to repair, and then let's say the Unilever, Mars holding, then the big companies, if they have number of assets in the balance sheet, then if they are going to make repair, then they need to identify and give it to the, when they are calculating tax liability, each and every asset with the repair cost respective each asset. Then it is practically difficult. Then we need to identify each and every asset. Normally, when we are calculating the depreciation capital allowance for tax purpose, we take whatever the class entirely. Let's say they have purchased furniture 100 million in this year. If they have purchased 100 million, we calculate apply the applicable rate, the 20%, that means 5 years, and claim the capital allowances. Then we are not taking each asset category one by one. Furniture, let's say table, chairs. Likewise, we are not identify separately. We take as a class. Then this very practically difficult to identify exactly which asset we made repair, because since we have not taken exactly, then it is very difficult and company are reluctant. If they can do it, then they have to put extra effort and they can do it. Not Then they are reluctant to do separate adjustment, then because of practical difficulties. So this is how the calculation. Then we'll move to the slide again. We'll explain. Right. Here we discuss in all other cases, not the repair and or improvement expenses for class 4 asset. Here we discuss example 5 years, the 20% of the WDV of the asset and the end of the previous year. In the previous year, they have to give previous year WDV in the exam. Then only you can calculate the allowable repair cost, and also whatever the excess expenses you can add it to the depreciation basis. Then the repair expenses of the deduction has not been allowed as a result of limitation to be added to the depreciation basis. To be added to the depreciation basis. Now I think you clear that the depreciation basis. So then we'll move to a small calculation. I am going to give this calculation for you. You need to send your answers one by one, because we need to have active participant, not just watching like a movie as in a bed, because we need active participant. Then I'm going to ask you to calculate allowable repair cost is how much is one, and then excess repair cost. What is the excess repair cost to be added to depreciation basis? And the third one is calculate the capital allowance for year of assessment 2022, 21-22. Then the examiner has given the during the year of assessment 2021 cost of repair is 400,000. Then assume that your year of assessment is 2021. Then you cannot claim entire 400,000 repair cost, right? You cannot claim entire 400,000 repair cost. Therefore, then you need to do this adjustment based on the section 14. So, right, then they have given WDV of the asset at the end of the previous year. That previous year means 1920. So you can do the adjustment, and you can tell your answers in to the chat box, or else you can speak up, no matter. The what is allowable repair cost. Then here the asset is not a class 4 asset. Here the asset is not a class 4 asset. It is coming under this all other asset, 20% of the WDV. You cannot it, not a class 4 asset. The first answer, what is the first answer? Can anyone share in this chat box? What is first answer for first one? Can anyone text in this chat group? What is allowable repair cost? if it is not a class 4 asset. Yeah, I got one answer. Yes. Yeah, I got one answer and two. Yes. Three answers. Yeah, I'm getting answers now. We have active participants now. So yes, that we got four answers. Let's see. Yeah, five. Moving to the answers, let's say the minimum answers requirement is 5. We are getting 6 now. Then one student has sent all 3 answers. Then the first one is how much? First one is 800 is the repair. 800 is a WDV. Then it is not a class 4 asset. Then the 20%. Then the 160,000 is the allowable repair cost. Then you can't deduct entire 400. You need to allow only 160. Then the, I think auditors or tax accountant in the company, they have he might charge entire repair cost to the P&L 400,000. Then what you have to do? Then the excess repair cost you have to disallow. Then the second answer is I am getting the second answers. Also, the excess repair cost you need to disallow. That amount is 240,000. Then the 400 minus the allowable repair cost. Then the excess repair cost is 240,000. Yes, as you correctly says. Then the excess repair cost is 240,000. Then the 400 minus 160. Then the last one, calculate the capital allowance for the year of assessment 2021-22. Then what is capital allowance? Then as we calculated in the whiteboard, the capital allowance is in the whiteboard we discuss here. The capital allowance is the examiner is asking this one. Capital allowance, this one. Likewise, if we added to the depreciation basis, the capital allowance for this calculation is this one. Right? Likewise, you have to calculate capital allowance on this scenario. Right? Then we'll see the asset is depreciation basis 1 million. Then the 5 years depreciation for the year is 200. Then the let me open the last point. Then the 1920 depreciation basis is, that means WDV, 800,000. You can see then the 1000 minus 200 is 800. Then this is the WDV, that means depreciation basis, as I explained earlier. Then divided by 4, then 200. Then the year of assessment 2021, that is this year of assessment 2021. Then 2021 600 is the depreciation basis, 3 number of years 3, then 200 is depreciation. Then the WDV is WDV in the year of assessment. This 800 WDV is the one they have given in the previous year WDV, that is 800, right? This 800, say using pen, this 800 is the WDV. Then Then let's say then the WDV for the 2021 is normally 400. 600 minus 200 equal to 400 is a WDV. Then it is required to add disallow excess repair cost here. Then the excess repair cost, they have added, then the excess repair cost we need to add it here, the excess repair cost. Then altogether excess repair cost, once we added to the excess repair cost, then altogether the depreciation basis is 640. Then if it is divided by 2, then the depreciation for the year is 320. Then the next year 320 divided by 1, only 1 year is remaining. Then the depreciation for that year is capital allowance is 320. Then is it clear to everyone? Anyone can comment? Any question? The depreciation repair adjustment. Is it clear? No comment means not clear. Anyone can comment on that, whether that calculation is clear or not? Okay. Then we'll move to next slide. Is we'll remove this, and then we'll move to next slide. Is the main, again the important part when we are doing the calculation. Sorry, before that we have one remaining para relating to repair cost. Repair cost allowed based on WDV at the end of the previous year of assessment in respect of new asset purchase, right? Normally we did the WDV, repair cost adjustment, if there is a WDV in the previous year of assessment, because the adjustment required, normally it says that you need to consider previous year WDV in order to determine the allowable repair cost. Then let's say new asset. If it is a new asset, here the new asset purchased during the year or asset which were not put to use, that means they have not used. Then normally when we are discussing capital allowance section, we discuss asset should be owned by the company, ownership should be there, and also if asset should be used during the year of assessment, then only they are allowed to claim capital allowances. If they not use during the year of assessment, no repair cost is allowed. That means if there is no WDV, no repair cost allowed, since there is no WDV, right? The end of the previous year of assessment, in the subsequent year of assessment, capital allowances is given on such repair cost, right? If there is no WDV, then we cannot do the adjustment. Then the entire repair cost we need to add it back. Whatever the charge, entire repair cost, we need to add it back to the P&L. Add it back to when we are calculating the assessable income from business, because they have deducted repair cost. Then because of there is no WDV in the previous year of assessment, we have to add the entire amount. Let's say this scenario happened. Normally, if asset purchased during the year, in that year itself, they made big repair cost. The company incur major repair cost. They have charged that amount to P&L. Then what they can do is they are not allowed to deduct that entire repair cost into the P&L. As per this rule, they have to add it when they are calculating assessable income, then when they are calculating taxable income, assessable income from business, they have to add it back again if they charge to the P&L, right? In the subsequent year of assessment, capital allowance is given on repair cost. Then they can claim subsequently capital allowance on next year, right? Then this year they have incurred, since they have not WDV, the entire amount is disallowed. Then such cost we can claim capital allowances by adding to the depreciation basis next year, right? Is it clear? I think is it clear because in the year of assessment, if you want me to explain this one in the whiteboard, let's say repair cost incurred, let's say 100,000. Then there is no WDV. Then in that year, because the asset also purchase uh, during the year of assessment, let's say 18, 19, 20. And also let's assume that they have incurred repair cost assuming 100 million. Then what they have to do is, they have, when they are calculating plus minus, then they are calculating plus minus means the tax adjustment. Normally we call it as plus minus. We put here the PBT, profit before tax, X amount, right? Then whatever the repair cost, they have charged to the P&L this amount, right? Because this repair cost they have charged P&L. Then as per the rule, since there is no WDV, we have to add this repair cost to the plus minus. Added since right, we have to add that amount. Here the amount is 100, right? Then this year is closed. Then the next year they can claim capital allowance on 100 after calculating the WDV during the year. Then let's say asset cost is of the asset is 1,000. Cost asset 1,000. Then they can claim capital allowances. Then capital allowance is how much? Let's say machinery capital allowance, how we are going to calculate? 1,000 divided by 5 years, capital allowance is 200. Then the WDV is for this year, WDV 1,000 minus 200 equal 800. Sorry. Then the next year they can add it whatever the disallowed repair cost to this WDV. Then the year 2, this is year 1, here the year 2, we can do WDV is WDV 800. Then we can add repair cost 100. Then the depreciation basis is how much then? Depreciation basis how much? Then the depreciation basis is 900. Then 900 divided by 4 is the amount you need to consider as a depreciation for year 2. I think this is much clear for you. Then moving to next adjustment is leasehold asset purchase prior to 1st April 2018. Because this adjustment, as you all aware, the leasehold assets normally came because of the 1st April 2018, because new law came into effect with effective from 1st April 2018. The new law. Previous law is number 10 of 2006 Act. Then the previous act, they allowed lease allowance as a deduction. These allowances, they added to the whatever the interest cost charged to the P&L, and they can claim lease allowances based on the asset type. Then we will discuss in detail here. Under new law, the asset, lease asset, if it is ownership transfer to the lessee, then we can capitalize for tax purpose as per the, and also as per the SLFRS 16 new lease standard also, then you are required to do this adjustment, right? Then if it is capitalized, then that asset we can claim capital allowance on lease assets also, because the based on the, if it is ownership is going to transfer to the lessee at the end of the lease period, then we can categorize as asset, depreciable asset, then we can claim capital allowances. We'll discuss in detail, just I told a summary. We'll discuss here whatever the prior period, because new law came into effect with effect from April 1st, 2018. Then the prior period, if they have purchased lease asset, then what we have to do? Then because new law came, it says different story. Then the whatever the previous law says different story. Then what we have to do? We need to check the transitional provision, what they have told on what adjustment we can do on leasehold assets. So then regulation 8 of the Gazette notification issued on transitional provision, any profit, loss, receipt or payment in respect of finance lease agreement, any finance lease agreement, a previous law I am referring, any finance lease, because they're not operating lease, here they refer to the finance lease. Operating lease, in previous law also we did not claim any capital, whatever the rental paid as allowed as expenses, right? Then here they refer to the finance lease agreement and entered into prior to 1st April 2018 is to be computed according to the provision of the previous law. Then what is the provision they say is, then in the case of lease rental paid for the asset other than IT equipment, then the other than IT equipment means what? Vehicle, furniture, machinery, what, etc. Then the other than any asset other than IT equipment, they can claim excess of 1/5 of total lease value per annum is disallowed. Excess of. Then whatever the lease rental paid, we need to determine the lease rental paid, and also we need to determine 1/5 of the total lease value. Then if there are any excess, then we have to disallow. Then we'll do this example. If a person carries a lorry, acquires a lorry on a 3-year lease on 1st April 2016. Then you can identify the year of assessment 16, 17, 17, 17, 18 and 18, 19. 18, 19 also the new law. The previous 2 years, 16, 17 and 17, 18, the under old law. Then we can't shift it to new law now. Then transitional provisions says that you need to continue the same basis in this year of assessment also, right? Then and pays lease rental including interest 50,000 per month. He would have paid 600 during the year. Calculate allowable deduction as per the as lease allowances. Then how to calculate? Then we are going to calculate the lease rental paid. We need to adjust the lease rental paid, allowable repair cost, allowable lease allowances. The how much we are going to calculate. I will work on it by using the whiteboard again. Right. Then we need to identify whatever the lease rental paid during the year. Here, let's say lease rental paid. Paid. How much is the lease rental paid? Can anyone tell me? How much is the lease rental paid during the year? Right, 600,000. Then, as per the section, the previous law says that we can allow only 1/5 of the lease value. 1/5 of the lease value. Then we need to determine 1/5 of the lease value. 1/5 of the lease value. Then because the section they have given 3 years, then how we can determine 1/5 of the lease value? 1/5 of the lease value. Can anyone tell 1/5 of the lease value? Because the 3 years they have given. If I share the slide here, they says that the lorry they have purchased on lease basis 3 years, 3-year lease. They have taken 3-year lease period, right? Taken this asset. So then the 3-year, then they paid lease rental 50,000. Then the lease value is how much? Can anyone reply? The lease value. How much is the lease value? No one. Then the 50,000 into 3 years. Yes. Lease value is, I got one answer. Others also can. 50,000 into 3 years. That means 12 into 3, 36 months. The lease with the others, check whether this answer is correct. Right? Then 1/5 of the lease value is how much? Can anyone tell me quickly? 1/5 of the lease value. 1/5 of the lease value. 1/5 of the lease value. Please be quick. Yes. In one answer, the 360. Then you need to determine whichever is lower amount is allowed, right? Then you can allow whichever is lower. Here, soon after you decided both, whichever is lower, you can deduct as a lease allowance. Lower is 360, you can deduct as a lease allowance, right? Then we'll move to the slide. Here, then allowable deduction allowed, whichever is lower, is 360. Then because lower amount we can claim as a lease rental, the lease allowance. We call it as lease allowance. Then the previous law we calculate like this. Then I need to highlight you in this scenario also, sharing this whiteboard, because here in the year of assessment, if you can see, they have purchased this asset under lease term in the year of assessment. In the year of assessment 2016 70. This is first year. Then the year of assessment 17 and 18 also, we can call it second year. The first year applicable law is Inland Revenue Act number 10 of 2006, right? 2006. And here also the same. Then the year of assessment, then 2018, 19, third year, because they have taken lease agreement for only 3 years, right? Then this year, the relevant applicable act is Inland Revenue Act number 24 2017, right? Then the applicable act is number 24 of 2017, but it clearly says that if that in the transitional provision, even though this year the act number 24 of 2017 applies, you can continue the same basis. Right? Continue the same basis in the year of assessment 2018, 19, and so on. based on the transitional provision. Regulation 8 of the transitional, right? They can continue the same based on the regulation 8 of the transition provision. Based on the transition provision, they can continue the same basis. That means what we have discussed here, this calculation mode, the whatever the method we apply, we can continue in the same year, right? No worries, they can continue the same because transitional provision says that you can continue the same basis. Therefore, you can continue the same basis in the year of assessment 1819, and also in the 1920. Let's say asset they have taken a lease 5-year lease agreement, then the 5-year mean then the 19 and 20, 2021 also you can continue the same previous law provision. The previous law means number 10 of 2006 Act that they have explained. Then I'm moving to the slide again. Here, then all other cases, that mean the all previously we discussed whatever the asset other than IT equipment, asset other than IT equipment. Here, whatever the lease rental paid on information technology, IT equipment, 1/4 of the lease value is disallowed. Excess of 1/4 of the lease value. Then it is easy. Nothing is new. Then the 1/4 of the lease value is the here. You need to consider only whatever the fourth. If it is IT equipment, you need to consider this one as a 4. Right? No any difficulties. You can easily calculate and see the allowable lease value, lease allowance. Right? Then in the IT equipment, the excess of 1/4 of the total lease value is disallowed. Then the lease interest or stamp duty charge on such lease asset to the profit is not allowed. Right? Then the lease interest and the stamp duty charge on the lease asset or the profit. Then the whatever the lease interest normally, whatever if there are any stamp duty charges, then we have to disallow. Then normally, as you aware, then the interest paid on lease we have to disallow. We are claiming lease allowance, right? Since the installment payment of a final including in the interest part aspect, then the then here we'll move to the new law. What talks about the what are the new provisions as per the new Inland Revenue Act. It says that, right, if lease asset purchase after 1st April 2018, right, mean the year of assessment 1819 onward. If asset purchase under lease term in the year of assessment 1819 or from that year onward, then these are the treatment you need to follow. Then the lessee is treated as owner of the lease asset, right? Lessee, as per the tax law, treated as owner of the lease asset. The lessee is treated as having acquired the asset at the commencement of the lease. Normally, we treated as per the previous rule and accounting. At the end of the lease term, the asset will transfer to the lessee. But here, as per the new law, they treated as the asset acquired and the ownership at the beginning of the whatever the lease period, at the beginning of the lease period, commencement of the lease. Then whatever the, let's say they have company, they have taken a lease in the year of assessment 1890. From that year onward, they are required to consider as a capital asset, and they will depreciable asset. Then they can claim capital allowance on that lease asset. All right. Then the lessee is entitled to claim capital allowances. Previously, the whatever the bank or leasing company, they claim capital allowance on lease asset. Whatever the first before 1st of April 2018. So if you do the bank tax computation, they have claimed capital allowance on lease asset from their books, right? Then when they compute in their tax calculation. Then now from 1st April 2018 onward, they are not allowed to claim capital allowance on lease asset. Only the company, not the finance company or the bank. Company, whatever the lessee, can claim capital allowances on lease asset based on these two, ownership, and they are treated as acquired asset at the commencement of the lease. Then they can claim capital allowances. Then interest cost can be claimed subject to restriction of thin capitalization and section 12. Section 12 says the interest expenses, it should be related to business, or if it should be related to purchase and asset, borrowing cost, right? Whatever the interest expenses related to, it should be related to business. Anyway, interest expenses that are incurred in the production of income. If it is, if such interest is related to business, only they can deduct. And also section 18 says that it is subject to thin capitalization. Thin capitalization means finance cost adjustment. The section 18 we discussed, which is applicable to entity, not the person, entity. Entity includes company, partnership, and trust, right? Then thin capitalization adjustment you can do only if it is not a bank, right? We discussed thin capitalization. You can refer the previous videos on the sessions if you can recall the things. Then you can recall. So then here interest cost can be claimed subject to thin capitalization. Then normally you will charge interest which is subject to thin capitalization. Then before moving to this, I will take you through the previous law what we have did when we calculate in plus minus. Plus minus means short name I call it plus minus. Let's say plus minus. Normally in the previous law, the plus minus. Right here, the whatever the let's say PBT amount, then whatever the amount lease interest charged to the lease interest charged to the PN. In the previous law, what we have to do is we have to add it back. Then what we can do is we can claim capital allowance on lease allowance of lease asset. We can deduct the based on the restriction as we discussed previously. Then what is the restriction is if it is other than IT equipment, 1/5 of the lease value, 1/5 of the lease value or rental paid paid, uh, whichever is lower. In the case of IT, then you need to adjust accordingly for 1/4 of. Right? You can claim this is how we did the plus minus in the previous law. Right? You need to consider the same basis. If there is any asset remaining lease terms in the year of assessment 1920 also, then you need to do this based on the transitional provisions, right? And then we'll move to the new law provisions, how the tax treatment applies. Here, the tax treatment of then the new law, it says that the right to use asset that operate in lease, how the tax treatment, and also the tax treatment for finance lease. Then the tax treatment for right to use asset, that means operating lease, whatever PBT we consider here. Then the depreciation charge to the P&L, because as per the LKS 16 new leasing standard, then the whatever the right to use asset also, the operating lease also, they will consider as an asset of the company. They will charge to the P&L their depreciation. Then whatever the depreciation, we need to add it here. And also if there are any interest portion, we need to add it plus to the plus minus. And then whatever the actual rent paid, actual rent expenses, we can claim here, right? This is for the tax treatment for operating lease under new act and SLFRS 16. Then the tax treatment for finance lease. Finance lease, whatever the, because that finance lease also with effective from 1st April 2018 onward, we can capitalize and can claim capital allowances. Therefore, depreciation charge to the P&L, we need to add it. Then, same basis, we can claim capital allowances on lease asset based on the type of the class of the asset, whatever the class 1, 2, 3, 4, 5, right? Then here the learning point is interest charge to the P&L allowed, but subject to thin cap adjustment. Thin cap means finance cost adjustment under section 80. Here, this is subject to thin capitalization adjustment. Then the interest cost we need to then the allowed, but subject to thin capitalization adjustment. Then the automatically, if there is interest cost, which asset purchase after 1st April 2018 under lease term, then the accountants, they will book the interest as finance cost. Then we need to consider finance cost, and we need to check whether thin capitalization adjustment and whether that amount is allowed or not, right? Then sometime there will not be a adjustment, then sometimes the full amount will be allowed, or sometimes there may be some amount we need to add it back, right? Based on the thin capitalization. Basically, we need to identify if it is finance lease, three things: depreciation charge, the P&L, and we need to do the capital allowance on that asset, and whatever the interest charge to the P&L, we need to go to thin capitalization adjustment quickly. We'll go. And we need to do thin capitalization adjustment here. Thin capitalization adjustment based on the here based on this formula. The finance cost all together in the lease interest also will fall under this based on the entity type. If it is manufacturing, three times, if it is not manufacturing company 4 times, right? And then right here, then we are going to another important section, disposal of assets. Here, disposal of asset, uh, the new concept they have bring into law, then they, even if it is same method of calculation, the new wordings they have mentioned here, where a depreciable asset of a person is realized a assessable charge. Assessable charge is to be included, that is profit, and also balancing allowances as per the section 16 and 4th schedule is to be granted loss in calculating person income. See here, I'll explain. The assessable charge means is taxable profit of disposal of depreciable asset, right? If you are going to dispose an asset, you will calculate accounting profit or loss, you need to calculate separately based on the accounting principle, right? Then you need to calculate taxable profit on disposal or taxable loss. Then if there is a taxable profit, we call it as assessable charge. Assess the profit, right? Assessable charge. Then if there is a taxable loss, then we call it as balancing allowance. Balancing allowance, we can deduct, right? Then assessable charge or balancing allowance are to be calculated respective asset realized, that means sold, during the year of assessment if capital allowance have been granted in the year of assessment or early year of assessment accordance with the provisions, right? Then how to calculate assessable charge is the question, right? The same, nothing is new. The assessable charge we are going to calculate is A minus B, that is called it as assessable charge. The simple, remember you can take this word taxable profit on disposal of depreciable asset. Then the balancing allowance B minus A, balance taxable loss on disposal of depreciable asset. Here, what is A and what is B? A means consideration received. Consideration received means the sale proceed, right? Sale proceed by a person during the year of assessment, right? Then the B means written down value of the asset at the time of sale. Then you know that sale proceed minus WDV. Here balancing allowance WDV minus sale proceed. If it is WDV is higher than the sale proceed, then there is a loss. Then you need not to change this formula from this to this. You can apply the same formula and you can word it properly whether it is accessible charge or the balancing allowance, right? Then the how to calculate is I will explain. We'll have a quick break, 15 minutes, because we started a bit late. Therefore, sometime you need to have dinner. Therefore, we'll have 15-minute break and start 8:45. Right. Here the accessible charge A minus B and the balancing allowance B minus A. Then the how to calculate that. Yes. Asangi, yes. Thanks for reminding. Just I started recording. accessible charge A minus B and the balancing allowance B minus A. Right? Then I will again share the whiteboard because I couldn't start record. Then the whiteboard we discuss here the accessible charge. You can calculate A minus B, sale proceed minus WDV, 100 minus 60, 40. Then the balancing allowance, taxable loss on disposal. We call it as taxable loss on disposal, B minus A, WDV minus sale proceed. Let's say WDV is 60, then the sale proceed is 20, then the balancing allowance is 40, right? Then we can use the same formula what we use here, the same formula here also for calculation, sale proceed minus WDV, then we end up with loss. Right, within bracket we can mention that, no worries. Then you know that name clearly because you have to clearly distinguish the name properly, the whatever the accessible charge, whatever the balancing allowance, right? So then moving to the slide again, then we'll disposal of asset, the continuation, how we are going to include in the plus minus. This is also important. So the how we are going to include in the plus minus is the profit before tax. Yes, you aware we need to mention here profit. If it is loss, we need to mention here. Then accounting at or less. If it is accounting profit, or if it is a loss, disposal of depreciable asset. If it is accounting profit, what we have to do is accounting profit we can deduct here, right? Accounting profit, because it is included in the PBT, therefore we need to deduct accounting profit. If it is accounting loss, they have deducted from here, therefore we need to add here accounting loss, right? I think you can remember here the accounting loss we need to add it. If it is accounting profit, we can this accounting profit we can deduct, right? Then it is important to do the adjustment on accessible charge. If it is accessible charge, then that is we call it as the simplification wording is disposal profit on taxable profit on disposal. Then we need to add it if it is taxable profit here. But if it is accounting profit, we need to deduct. We need to add a taxable profit, right? Then it is correlation is like this. Like here we are deducting accounting profit, and we need to add a taxable profit, right? Then in other way, then the accounting loss we need to add it here because the accountant they have deducted, because we need to add that one, and we need to claim balancing allowance that is called it as taxable loss on disposal of depreciable asset. This is the amount we need to deduct from as a balancing allowance, right? And it you are clear with this adjustment, accessible charge and balancing allowance. If you have any doubt on that, you can ask now. Is it clear? You can comment on that one if it is clear, then I can go. Is it right? Right? Is it clear to everyone? The adjustment, I think so. You are not sleepy. So we'll continue. Another 15 minutes or half an hour. Uh, Disposal of fixed asset. Any gain on capital asset for which capital allowance for depreciation is not granted is considered as a business income if such capital asset is effectively connected to the business. Then you need to, here they are saying that any gain on a capital asset, if it is capital asset, then in the case of if the depreciation allowance for depreciation is not granted, there is a capital asset, there is a gain on capital asset, the company, the allowance for depreciation is not granted on such capital asset, and also it is considered as a business income if the asset is effectively connected to the business. If that asset, capital asset, normally we calculate the capital allowance on depreciable asset. Here there may be some asset, the capital asset, but it is not a depreciable asset, right? We call it, let's say, land. We have a land, it is a capital asset, but it is not a depreciable asset. Then since it is a land, capital allowance for depreciation is not granted, right? Then it is considered as a business income if such asset is effectively connected to the business. If it is effectively connected to the business, then we can consider that as a capital asset, and also we consider as a business income. So calculation base, then here this calculation, if there is a realization of any capital asset, then let's say land, then they have to apply this chapter 4 of the asset, that is how to calculate capital gain on the asset, right? Then this is chapter 4 is dealt with capital gains. Then you need to refer if it is a capital asset, if it is effectively connected, which is not capital allowance granted, then you need to calculate the capital gain based on the provisions in the chapter 4 of the act, right? However, the market value as at 30th September 2017 is not applicable since the asset is not investment property, right? If it is an investment asset, only they can consider the market value as at 30th September 2017. We will discuss the capital gain when we are discussing the capital gain. We will discuss capital gain separately, how to calculate the capital gain, how to determine the 30th September value and the market value. The same accounting principle, fair value, measurement, level 1, level 2, level 3 also will apply. The same provisions are there. They will discuss the capital gain next sessions. Here, then as example, a land which is treated as a business asset, the cost which is deductible in ascertaining the profit or loss on disposal should be historical cost, subject to deduction is specified in the section 37. Then when we are calculating the capital gain on capital asset, then we can deduct certain expenses which are incurred, agent, broker fee, agent commission, advertisement cost, and so on. They can deduct whatever the direct expenses, lawyer fee, they can deduct. Then we will do the capital gain calculation next chapters. So anyway, the concept is here, if it is a disposal of capital asset, then we need to consider the chapter 4 in order to determine the capital gain. This is not the normal provision sale proceed minus WDV, because it is not a depreciable asset. Therefore, we need to consider the chapter 4. Basic concept is, if it is capital asset which is not allowed for depreciation, then we need to go to the capital gain section, chapter 4, and we need to calculate the profit or loss based on the chapter 4. But we can't consider the market value as at 30th September. We need to consider the market value, historical market value. Because in the investment property valuation, we did the market valuation as at 30th September, because the historical, if we take historical cost, then it will be a massive gain on capital asset. Therefore, we need to consider the 30th September for capital gain tax, investment property. Since this is not an investment property, I will quickly summarize this application also for your understanding purpose. If it is capital asset, investment asset. In the case of capital asset, what we have to do is here we can consider the capital asset in the market value asset the sale date, which asset going to be sold, sale, let's say selling date, right? The market value is 100. Then the asset, cost of the asset at the time of purchase. Since this is not a investment asset, then the amount is, let's say land, now market value is 100 million, we purchase it 2 million, because historical cost we need to consider. Then how much is the capital gain, disposal gain? The 98 million, we have to pay tax on 98 million. It is a capital asset, we calculate under this. If it is investment asset, we are not going to calculate like that. We can consider, here we considered historical value. Then in the case of investment, it is easy. The market value at the time of sale, let's say 100 million, the same. The cost of the asset at the as at 30th September 2017. The 30th September 2017 amount is almost equal to the market value. Because let's say 80 million, 90 million. Then the capital gain capital gain is 10. Here the difference you can see, because if we, let's assume the land we purchased 1980, 1950, 1921, or very early stages, because the capital cost of purchase is very low. Then we compare with the market value, then the 98, where it is very unfair. Therefore, sometimes they will amend this section properly. Until such time, we have to do the calculation like this. If it is investment asset, they have made a provision, the market value, saying that market value is, we need to consider 30 September. Even it is historical value is 2 million, 3 million. We can consider the market cost of the asset as at 30th September market valuation. This is actually not the actual cost of asset. It is actually market value as at 30th September. Then we need to consider if it is capital gain. When we are going to calculate capital gain, we need to consider the market value as at 30th September and also market value at the time of date of sale. Then only we can calculate capital gain. This is the difference between both, right? Then moving to again the slide. Then we will finish the depreciation disposal adjustment. Then the next one is disposal of leasehold asset purchased prior to 1st April 2018. Here we discuss the disposal of lease asset. We discussed previous slide disposal of capital asset, depreciable asset. Now the disposal of lease asset. If the asset is purchased under lease term and we are going to dispose. We are going to dispose 1st April, which asset purchase prior to 1st April 2018. Now we are going to dispose that asset. Then what is the tax treatment, right? Then let's assume we purchase the lease asset under lease term year of assessment 16 and 17. Now in the year of assessment 1920, we are going to dispose such lease asset, right? Then what would be the tax treatment for that? If the lessee has acquired an asset under lease term, right, in the use of trade business operation under lease agreement, if asset is not qualified for allowance for depreciation, then such asset is treated as full depreciation has been claimed. If they have claimed lease allowances, then at the time of disposal, we need to treat it as full depreciation has been claimed, right, to the lessee to the extent that repayment of capital value of such asset. All right. Then when the lease asset is sold, where the such sale is upon the termination or not, even if it is they might have in the termination they are selling the lease asset, or else they can sell it before the termination. It is subject to tax. Normally that is subject to tax. We need to calculate the disposal profit. How we need to determine the disposal profit is, it says under bullet point 4, if a person has obtained a lease asset under lease agreement and the lease rental have been allowed as expenditure, because we are calculating lease rental 1/5 or 1/4, right? The receipt of disposal of such lease asset, if the asset, let's say lorry company has purchased under lease term, then they sold this asset during the year, and whatever the amount they got, we call it as receipt from the disposal of lease asset, whether acquired directly or through a nominee, shall be treated as a receipt. We need to treat it as a receipt of the business company after deducting cost of acquisition. If any cost incurred by the company for the acquisition, the lawyer fee, the legal document fee, stamp duty, they can deduct such expenses, and that amount need to, that means the receipt of disposal value need to treat it as assessable income from the business. Then we need to add it to the plus minus. We need to add it to the plus minus, basically whatever the receipt from disposal, whatever the expenses initially we incurred, we can deduct, no issues, right? Then if a disposal of lease asset, that clearly says that after 1st April 2018, it is very clear. After 1st April 2018, it is simple. You can calculate basically since the lease asset are qualified to be claim capital allowances, because lease asset you are qualified to claim capital allowance, right? Tax treatment is similar to the tax treatment apply in the asset which is depreciation is claimable. Normally what you have to do is, if it is this asset you purchase under lease term after 1st April 2018, then what you are going to do is normal tax treatment. That means that means assessable charge or the balancing allowance, assessable charge or the balancing allowance you can calculate accordingly. No any hard and fast rule, right? Right. We'll stop today. I'm getting some indication that we'll stop today and start from slide number 52 onward, the bad debt received and write-off, right? Then we'll meet again next session, session 4, continuation of this company taxation. Thank you for